All right, so panel is about to start now. Well, I guess it's starting now. So this panel is going to be about talking about just kind of preconfirmations in general. There's a lot of different flavors of preconfirmations, similar to intents. So this panel will be about kind of demystifying it, getting a little bit more nuance onto all of the different preconfirmations that are out there. So the first thing I'd like to do to start off this panel is some quick intros. Everybody can go around, give a brief introduction about what your project is, project goals, and a status update of where you are so far on those goals.
Right, so I'm Jonas from Chainbound, and we work on a project called Bolt. Bolt is a proposer commitments protocol that's focusing on inclusion preconfirmations for now. Where we are currently is we just deployed on Holesky with our own validator, so we're testing that, and we're sort of trying to get other people involved as well. So if you're interested, please reach out.
Awesome. I'm Murat from Primev. We've built Mev Commit. It's been testing on Holesky for a while. We're soon going to mainnet. It's a little bit more of like down in the infra layer, less close to the user, more close to like searchers and solvers and block builders. And yeah, looking to discover and talk more about how these protocols can interoperate here.
My name is Harry, one of the founders of Luban, and Tai is our block space commitment protocol. We like to think that we want to explore what's the best efficient use of a block space. I think one subset of the use case is basically pre-confirmation, inclusion pre-conf in particular. In terms of progress, we are currently on Holesky, but I think after last week's workshop, there's going to be a lot of updates. So, yeah.
Good morning. I'm Kevin from ETH-Gas. Similar space, pre-confirmations, I guess. We have basically a real-time marketplace for block space, so the entire block itself, as well as pre-confirmations. And you can kind of buy and sell these as financial products or instruments in real time and kind of trade them from person to person.
All right, so what would be some of the, there's a lot of overlap between all of these projects. What would be some of maybe the technical things, the technical approaches to providing pre-confirmations for each of these projects, and maybe some pros and cons, like what do you think is going well so far and why you chose this approach, and more so, like what's kind of the biggest difficulties are with this approach as well, because no free lunches exist.
Yeah, I can start. So we chose the proposer-centric approach because we wanted to be on the right end of the credibility spectrum and the certainty spectrum of pre-confirmations. The side effect of that is that you can't do too many very sophisticated proposer commitments because the validators, obviously on Ethereum, you want them to remain relatively unsophisticated. And inclusion preconfs, in our view, is something that's simple to price, simple to issue, and also simple to communicate downstream with the builder so that they can fulfill these commitments. So it's still compatible with PBS. You don't really eat into the revenue of any like MEV transactions and stuff like that, which is what you would sort of do with execution preconfs naively. So yeah, we think like with inclusion preconfs, there are already quite a few interesting things you can do, and then potentially expand into other proposer commitment types if we see that they are viable and useful. And yeah, possible to implement. So yeah.
Interestingly, I was previously at Block Native, and we had a mainnet block builder and relay during the merge, and so that kind of shaped a lot of my thinking. And having a product background, I was getting a lot of requests from people, saying, "Hey, I want these guarantees." And the reason I kind of split out and didn't want to build these as pre-confirmations as a feature on that block builder is because I saw it as an opportunity to kind of create ecosystem-wide features so that users or people who wanted to kind of consume this block space could interact with this network rather than going to this block builder or that block builder or kind of replicating things across block builders. And I also saw it as an opportunity to kind of democratize some access to block builders at the very least. So that's kind of shaped how Mev commit ended up being architected. It's kind of deeply integrated with block builders, and you kind of work with this network that's kind of block builder first, and then all of the transactions make it downstream to proposers and Ethereum, obviously. So, but yeah, I think these approaches really aren't contradicting each other in any ways. So like when you ask an outsider about like Bitcoin or Ethereum, they might be like, oh, those are all the same thing. But like, really, is like Bitcoin competing with Ethereum? Is Ethereum competing with Bitcoin? No, I mean, as we see, like the pie grows for all of them. And I think we're going to see something similar in the pre-confirmation protocol and all sorts of other protocol spaces where this is like a net new area that's going to grow, and the pie is going to grow, and everybody's going to kind of grow with it.
Yeah. I think a background story of ours was we started building 4 block space derivatives around last year, probably since the deprecation of gas token. Our team, myself in particular, has been thinking about how can we actually create a very efficient marketplace for block space. There has been multiple attempts, all on network, for example. I believe in the crowd, some of the people are actually actively working on that. So I think toward the end of last year, we started thinking about what are the best ways to facilitate this kind of exchange. So we came up with a design that looks very much like the pre-confirmation that we know of today. So in a way, our design predates pre-confirmation, so it's not necessarily just for pre-confirmation. Basically, what we want to create is, if you look at the block space commitments as pre-confirmation, one or two particular things we want to enable. First is the fungibility aspect of it. So there should exist a dynamic market for the block space. It's good for price discovery, but I also think it's good for the censorship resistance because you have a dynamic seller and buyer. So creating this market structure without relying on centralized infrastructure, it's something that we spend a lot of time on. How can we actually create this marketplace for block space where different parties can express their intentions to utilize the block space? I think one particular problem or risk that we are currently doing a lot of research on is if pricing the pre-confirmation is hard, pricing a block space in events is probably even harder because the proposer who's a seller of the block space is essentially short the gas fee volatility. So naturally, it's a very risky thing to do. So currently, we introduced this a delegation mechanism, but again, like delegating to a single party is not the best way to do so. So we're thinking about how can we actually decentralize this principal-agent relationship where the proposers can delegate to a more decentralized party instead of just one party that provide the price of a block space. I think that answers all the questions.
Yeah, I think within the spectrum of kind of decentralized versus centralized, I'm definitely the centralized guy here, with perhaps Jonas on the very decentralized side, and kind of directly to the proposer side. So yeah, we have a centralized venue, and our approach was that I think we're coming across similar issues here, right? But the proposer validator, and even the buyer, most people, they actually don't know how to price pre-confirmations, and nor do I, although we're making good progress with Connor and kind of the Nethermind team. But I think one of the dynamics was just coming up with price discovery. And so, if we have like a real-time trading or a real-time exchange where we could trade pre-confirmations, then ultimately, like, the price is the price. And, we don't need to use a model. In our instance, from our perspective, we feel like an auction dynamic is quite slow. And it could be kind of optimized a little bit more. So to the extent that we can turn that into a marketplace, trade pre-confirmations in real time, trade the entire block in real time, make the block trading kind of composable with the inclusion pre-confirmation trading. All of this kind of brings like real-time price discovery to the process. And so I'd say that's, along with our more centralized approach and pricing dynamic, I'd say that's probably how we differentiate ourselves versus some of these guys who are a bit more true to the decentralized ethos.
Yeah, and I would say there's not really one wrong way, and like Murat mentioned earlier, it's all about growing the pie as opposed to fighting for scraps. On that note, speaking of we touched a little, your answers touched on the economics of pre-confirmations, and Connor's talk earlier also kind of highlighted the inherent difficulty that is involved with pricing pre-confirmations. So let's talk money. What are the most promising areas that you see pre-confirmations having today, both from a user perspective and from a more important, maybe arguably more importantly than the users, from an economic perspective for the validators? You know, how do these pre-confirmations, how do you see them contributing value to the bottom line, based on, you know, just enabling pre-confirmations through these different types of marketplaces that are being built to facilitate pre-confirmations?
Right. So, disclaimer: this is like pretty early research for us. But with inclusion preconfs, I would say it's definitely easier to price because I sort of like Justin Drake's model where you have the sacrifice and the something else. But the sacrifice is essentially if you commit to including or executing a transaction, you're sort of sacrificing what it would have gotten you as a proposer by the end of the slot. With inclusion preconfs, the only sacrifice that you have is if the block ends up being full and everyone is paying more than the inclusion preconf that you've committed to, then you sort of lost money because you could have replaced that transaction with something that would have paid more. But the chances of that happening are quite low, and you can sort of derive your pricing model from congestion that you see in the mempool or from congestion that you've seen in previous blocks. So in our opinion, it's easier to price for the validator. Now, as to added value, if we think that inclusion preconfs are going to be used and people are willing to pay even a slightly higher priority fee for using them, it is like a sort of uncorrelated revenue stream because all of the, like 60% of Ethereum transactions today are not contentious, so they are of the preconfirmable kind, like inclusion preconfs. We're not saying that all of them are going to be preconfirmed through inclusion preconfs, but even if just a small portion of them end up being used through these and people pay like 1 GUI or 2 GUI more, it's sort of an uncorrelated revenue stream. Farad did a presentation, and we can send it in like whatever group is here about that and what ends up being the revenue if you account for those models. So yeah, I don't know the exact numbers, but it looks okay. So
what you're saying is kind of that it's net good, like it can only add value here.
If it ends up being used, yes.
Yes, okay.
Which is an assumption still.
Yeah.
But it doesn't. Sorry, it doesn't need to be used though, would it? Because they're still going to pay the tips. They're still going to pay the pre-comp fee. So irrespective, the validator still earns that. Is that correct?
Yeah, but I mean, when I say used, I mean people paying explicitly for like getting this commitment from the proposer by adding like a tip to the already existing priority fee.
Okay.
I think we, as in kind of like protocol builders in this industry, have an opportunity to kind of have it become the default. Right. And the analogy I draw here is for, you know, credit card payment networks. So we all pay 3% or so, you know, 1% plus some tip on all of our credit card charges, and we don't actively notice it, but, you know, this is essentially what we pay to pre-confirm our transaction and get our goods when we're at the grocery store. And we've all kind of explicitly said, we'll pay this, we don't care, I just want it now, and I don't want to wait until the merchant gets my bank transfer, so I'm willing to kind of pay this 3%. And that is all embedded into the cost of goods basically across the economy because it's been that deeply embedded. So I think we can move towards a similar kind of regime where all Ethereum transactions are just pre-confirmed at some point, and that's kind of the default. Sure, you can kind of go the slow way. It's kind of like the deliver it slow thing on Amazon, right? You get it next week, but you get a free Amazon movie or something like that, you know? But essentially, I think we can move towards it being the default over time. Probably not tomorrow, and maybe not early next year, but over time, I think we can make it the default, and at some point, everyone's just gonna, like, nobody's gonna wanna wait 12 seconds or 30 seconds or 1 minute. So I'd much rather pay 3% on my, you know, 20 GUI or whatever it is, and just, you know, close my wallet and click a transaction.
Yeah, and I think this is also a call to action for wallets. Like if you want to work on how that would look like at the wallet side, because you can imagine like a checkbox that says I want this to be like turbo included or something like that. Naming is not set, obviously, but that would be great for just lowering the friction for users to actually use this. They don't even need to know like how it works under the hood, but they can like very easily get this instant confirmation depending on the transaction type without too much friction.
I really don't have too much to say because I think you guys both covered it. But like, I think in terms of the positive EV, from the perspective of having pre-confirmation, like I'm all for inclusion pre-conf, not so much for execution pre-conf, because I don't think execution pre-conf necessarily increase the revenue for proposers. Also, it comes with a lot of sophistication with regard to how to price it properly. So we are all for inclusion pre-confs. We like to think pre-confirmation, at least the version that we provide, is like settlement as a service. Like you have a certain kind of a transaction that needs to be settled at a certain frequency, at a certain cost, a range of costs that you are willing to accept. We take on the other side of the trade. We give you a predictable settlement, predictable cost. That covers actually a lot of use cases. Like Jonas said, like most of the transactions are actually not, I think they don't necessarily touch like a contentious state. So we provide services to settle those kind of transactions, like exchange withdrawals or Oracle updates, proof networks. So some of those does contain MEV, but they don't necessarily have a like a swap transactions who need to access a certain contentious state, which just complicated the pricing aspect of it.
Yeah, a lot of stuff going on here. So I think we all kind of agree, at least on our side, we're all biased as well, that pre-confs will kind of add yield or value to the proposer at the end of the day. I think from our perspective, we also have this, again, this notion where you can kind of buy an entire block. And when it comes to, well, I think the nature behind the pre-confirmations is like certainty. So people are paying extra for their certainty, they're paying for faster latency, faster settlement. Now, when it comes to selling a block in and of itself, you know, the block should contain like as much MEV as possible with whatever's contained inside it. And so if you're potentially able to string multiple blocks together, you kind of like amplify, or the value of that MEV is almost super linear when you take into account, you know, as Connor's saying, like sexdex arbitrage, which is a function of time. So with us, you can effectively string multiple blocks together, and in that process, you basically bid up the value of the block, which should ultimately you know, pay very handsomely to the proposers at the end of the day. So as much as we're optimizing for, you know, faster settlement, you know, guarantees as well, you know, we're also optimizing for you know, basically paying the proposers more, giving the traders more choice, and I think we'll all get there. It's just a matter of like, you know, I think the approach that we're taking, whether it's centralized or decentralized.
All right, so I think that was kind of the most optimistic vision of pre-comps, and I mean, clearly this is everyone on the stage is biased that pre-confirmations are going to add value and that it's going to work. So let me just put on my hater hat for a second and, you know, be a hater about pre-confirmations, kind of like, you know, I'll be a Max Resnick for a second. So, you know, what's the value of pre-confirmations when the majority of your transactions already get, you know, included in a reasonable amount of time? For example, the block native gas estimator, you know, it already gives you a good estimate of what is required to get into the block. You know, 95% probability, 97, you know, anything above 90, does it really matter? And then if you wanted faster inclusion, just use an L2. Use base, use a centralized sequencer and be happy. Why even bother with Ethereum in the first place? Yeah, and so, you know, on that note, what do you guys see as the biggest hurdles to adoption for pre-confirmations that can, you know, kind of mess up this the path to victory, so to speak?
I mean, if everyone moves to L2s right away, that will probably be bad for like pre-confs on L1, because yes, with L2s you do get much faster latency, lower costs, and stuff like that. Our prediction is that it won't happen immediately. So we still think there's some use cases. And also, I'd like to say for inclusion preconfs, like there's actually two primitives. Like one is guaranteed inclusion and predictable settlement, like Harry said, where you know your transaction is going to be included at some point in the future, like at some slot. And the second is like this inclusion notification, which is like the preconfirmation. And if you have predictable settlement and predictable inclusion, you're also less likely to overpay for inclusion because you know exactly, like you can have some sort of communication channel with the proposer agreeing on a price. Whereas if you send it to the mempool, and you want to be included fast, you just need to sort of overpay because you're not really sure when someone is going to include that transaction. So there's that. And also, I'm starting to like the censorship resistance angle a little bit because with guaranteed settlement, you provide, or with inclusion preconfs, you provide an additional lane for users to send their transactions. That doesn't go through the regular mempool PBS flow. It sort of bypasses some of the inefficiencies there, and you go directly to the proposer. So you can also see it as a out-of-protocol like inclusion list
It's like a fast lane.
Sort of like a fast lane, yeah. So there's various angles to this, but I do agree that if everyone starts using L2s right away, the value of this becomes much lower, except maybe for the censorship angle. Yeah.
Yeah, I would think it would mimic how, use cases or usage from Bitcoin kind of went into, the other L1s as they popped up. Like Ethereum didn't kill Bitcoin because it's faster than Bitcoin. So like I said, the pie is growing, and I think it's just going to grow more as more L2s kind of grow itself, and L1 will also grow. And Bitcoin will even continue to grow as it is. I mean, the price is going up, transactions, blocks are pretty full. So I'm bullish on all of these platforms growing rather than one or kind of a set growing over the other, and that means L1 is going to grow a lot as well. So I'm prepared for it, and I think it will mimic how the migration from Bitcoin to other chains happened, where Bitcoin continues to thrive.
If everybody started using L2 today, I think a portion of that will probably start using base rollup. So I still think our value proposition still holds. But I don't think everybody is going to start using L2. There is some value in L1. There are certain services that can only be run on L1. I believe ENS will always stay on L1. Certain things like exchange withdrawals, like the one I mentioned, it's a very simple use case for preconf. So yeah, I think even like if using block native, they can provide you a pretty reasonable assurance of what the gas fee will look like. But I think we also provide stability. So a lot of applications actually want stability for their cost basis. So yeah, I'm not overly concerned about that.
Yep. I'm excited for just like faster throughput. So I think we all have, I guess, preconfirmations with kind of sub-block settlement. I think Jonas, you're like 100 milliseconds or half a second or.
Optimistically, yeah.
Optimistically, right? No, but the point is that you look at you look at the evolution of like order books and trading. It's all kind of moved to this like intent, like off-chain kind of interface where you're basically matching people off-chain, and you're basically settling them on-chain. But if we can basically settle people, like for us, we're about 5 millisecond pre-settlements, and so if you can trade every 5 milliseconds effectively on Ethereum, you can trade more than just one time a block. You could trade like 1,000 times a block, and so I think that's the exciting part, where basically now we have a people pouring like a ton of new trades into that single block. Now we're going to run into like capacity issues, which gets us into kind of the L2 space. But I think that's the beauty of it. You can trade multiple times within that L1 block with the intent networks. And coming to, I think again we have very different approaches here. But on our side, you'll be able to trade preconfs in future slots as well. So anywhere from like the second slot out to like 12 minutes from now, you could buy a preconf. And with that pricing information, we can work together with some of these guys as well. So for example, like Murat, like we were chatting about feeding some of our price feeds into what they're doing on their side, into potentially as an oracle or something. And that provides that pricing visibility to the players, and we could potentially do it with others as well. But yeah, I'm most excited for basically like faster throughput in each block and just getting more trades.
Yeah, and if there is faster throughput in the Ethereum block, then that slows down this L2 doomsday scenario where people decide to flee from L1 slowness and the growing pains. So we have a few minutes left. I'd like to open it up to some questions. I guess, yeah, if anyone has any questions, now would be the time. And I guess I'll be passing the mic around for it.
Good conversation. Thank you for the education today. Have any of you guys talked to I would say like the big validator industrial complex like Coinbase, Binance, and asked them about like their willingness or their preferences?
Yes. Yeah. From my side, so the conversations I've had have been varied. There's definitely different flavors of proposers. You have kind of the solo stakers who aren't even adopting like Mev Boost, for example. Some of the bigger guys are just like, I just don't want to get involved. If I can get paid more money, it sounds great. I'm not sure if you guys have heard something similar, but in between kind of the purely commercial side and then the, I'm not even adopting Mev Boost because I don't believe in the PBS flow or whatever it might be. It varies.
Yeah, same here. And actually, I'd like to say also that most of them have been very opinionated about how these pre-confirmations should come to market, like in terms of decentralization and in terms of making sure that it's also good for the future of Ethereum, not just for their baseline. So I'm pretty optimistic about that too.
I'd say there's about, in terms of market share, probably about like 60% of the validators are actively interested in testing on Haleski. I'm kind of making up a number, but kind of give or take.
Yeah.
Maybe 60% are kind of actively interested. The other kind of 30, 40 are just like, well, I don't have capacity, but I kind of want to follow the space. I think definitely everyone is looking to follow the space quite closely.
Yeah, and there's definitely interest and appetite, but they'll just move at different speeds. And I think it'll just mimic how Mev Boost happened too. Like you had the first 15 and 20% of the network kind of adopt really, really quickly. Then it took a while for it to get to like 40, 50%. And we were at Block Native and we had a relay and a block builder, and we were going to a lot of validators and educating them about it. And hey, you guys should like run this thing. And they're like, what is Mev Boost? And it's like, well, I have compliance requirements. Can you like have your relay, only send me OFAC compliant blocks? So there was like a little bit of friction in the early days, but it got solved. And over a year, basically, you got to now 91% adoption, right? So I think we'll follow a similar pattern. It might take 12, 18 months for it to kind of get that level of proliferation as well. But over time, everybody's interested and everybody wants Ethereum to feel faster or kind of catch on the next narrative. They want to support it. And there's actually a lot of competition between validators for yield. And a lot of them have institutional clients that are looking to put in like $100 million or something like that. And obviously at that scale, your little extra yield matters a lot. So they all want to be able to provide that to those clients and catch them. So they're incented in the right ways to kind of adopt these technologies as well.
Yeah, I think just by talking to validators, simple mental models, like given the risk I'm taking, how much more reward I can get. And the risk and reward, different people have a different risk tolerance. So far, I think most of the risk I've heard are addressable on a technical level. Some of the risk are regulatory risk is probably harder to address, but I think this should really depend on the risk tolerance of the validator, and given that risk, how much more reward they can potentially get. Some want to see Preconf to be more validated by the market. Some people are more sophisticated. They can do some experiment. They can actually extract the value themselves from it. So it's not going to be as fast as an MEB boost. I believe that they went from 0 to almost 80% in a span of 3 months. I don't think we're going to be that fast, but 12 to 16 months. Okay. Yeah. So, but still, if that's the case, we can probably catch up to that.
I feel like it'll actually be faster. So, coming back to Murat's point there, is that the sensitivity around yield. Like if there's a bunch of validators earning like 3.5% and one of them is earning 5, a lot of capital is going to shift to that 5, or everyone's going to update very quickly. Like the ability to, I mean, we've all kind of been in and around testnet and testing with a lot of these guys. It's actually very easy to adopt. Well, not very, but reasonably easy to adopt what we're doing on the validator side, and they're already pretty far down the curve. So I think as soon as like January or Q1, you'll start to see some of us in mainnet. And again, if it works, it could move very quickly.
So maybe just on that last sentence, I don't want to catch you out or anything, but I think it's related to some of the things I mentioned in my talk as well. It's like, how do we measure it works? How do we convince validators that like this is good and like that users should pay for this stuff? Like how do we get there?
On my side, I think it just comes down to yield and like I'd say like liveliness or security. I think what is that yield will vary, I think, depending upon the product that they're actually engaging in. So for example, if it's just the inclusion, if it's just like an inclusion preconf, then what is that versus just kind of like your regular transaction flow and not including, I call it kind of like exotic trades, like bundles and stuff versus vanilla. So if we can turn the vanilla transaction flow into preconf flow and that invariably pays them more, I think that will be a success case. But happy to kind of unpack this a bit more offline.
I think yield definitely one crucial factor, but I think there is an assumption, which is how many validators are opting in. If there is only one let's assume it's in case like there's only one validator in the entire network that provide preconf, the yield is not going to be there. But if we can have a consistent every other epoch, or let's say every 3 validators or this opt-in validator, and this particular validator can provide preconf, I think we can probably get a much more adoption. So I think probably that's an underlying assumption, and there's a big if at the moment. So I would love to see some kind of a standardization across the validators. Like say one validator can use different preconf protocols, and in this way we can all share validator sets across one another. In this way we can just truly realize the value of preconf.
Yeah, I think it's going to be like a sort of balance between the supply side, aka the validators, and then inducing demand. So first, in my view, we'll have exploratory node operators running this because there's no disadvantage to running this if it isn't used initially. Like maybe you incur some risk from running additional software. And then once you can induce some demand, they will start to see the benefits, and that will hopefully get the rest of the validators like over the line. But you need at least that initial group of validators to gain enough market share for preconfs to be useful. Because as Harry said, if you have only one of them, it's not great.
Yeah, I'd add that going hands-on is the best kind of approach to get them comfortable. Like we've had validators who opted in like March and April where our network had like very little use on testnet, and then they saw like a couple of waves. One was around ETHCC where there was like a lot of people who used it and like published a report on ETH research, and they saw like although it's testnet ETH, what they saw was, okay, well, so when somebody bids on your network, I see how that makes it into my block and I see how that increases value. So I'm basically like confirming the theory here, and the hypothesis works. So I'm more comfortable now trying this on mainnet, granted that there will be same kind of interest. So that seems to be the winning strategy for getting people comfortable, as with every other product, like going hands-on and using it. So we're really excited about that. The other thing is, what we've built with Mev Commit has an encrypted mempool and a chain. So we've been kind of reaching out to teams like some of who are on this stage to essentially like launch contracts on this chain, so that if validators are opted into Mev Commit, they can basically run their protocol already and already access that validator without kind of having to go to them and say, okay, can you also opt into my protocol or run this, etc. So I think we're going to see more of this kind of interoperability emerge in the pre-confirmation space through platforms, and I think it's going to be hopefully like catching on like wildfire on mainnet, after, probably like 6 months into next year where everything's available and it's kind of seeing the results.
I was just going to add one thing. Credit to Jonas and the Bolt guys, but I think over the last week, there's been a lot of discussions around kind of unifying endpoints to make the user experience easier for validators as well as end users. And so, basically like end to end, can I just make it? Can we just kind of unify the preconf interface as well as even the interface down to the wallet level? So there's some work done on it. It probably needs some polishing, but we're coming together to try to make it at least uniform to some degree to interact with at least one of us, whoever you might be. So at least not every one of us is talking to every wallet at once.
And maybe a slightly different question, but there was at least half of you were slightly bearish on execution preconfs. But then maybe like shared sequencing seems like it might be coming soon, or I'm not exactly sure what the timeline is, but can you imagine shared sequencing without execution preconfs? How do you see shared sequencing fitting into preconfs?
Base sequencing or shared sequencing?
Shared, well, I guess you can, maybe they're the same thing, but yeah. Shared sequencing, let's say, just in general.
I can't see it with execution preconfs. I just think the latency between two different sequencers would be too long. If you have kind of two different bundles that you want to run, or two different, if you have like a top of block, middle of block that you want to kind of simulate with two different sequencers, I think the latency between that might make it difficult. But I could be misunderstanding it. Oh, shared sequencing. Okay, I'll pass.
I'm only slightly bearish on execution preconfs on L1 because you're going from this 12-second block time with a highly efficient like MEV boost market where validators earn a lot of yield to something that is lower in block times or like potentially even continuous, but the validators are losing money, like at least naively, according to some of your models. So that's the reason, like if you come straight away with execution preconfs, like maybe Solana is a case you can make here, then it's less of a problem because you're not taking away revenue from the validator. At least that's how I see it initially. Yeah.
Yeah, my take is on that it's going to really depend on the use case. Like when we think of, oh, okay, I wouldn't want an execution preconf. Like again, like I go to these real world examples a lot, but like go to Uber, right? Like most of the time you're paying market price on Uber, but that one time you really want to get home and there's surge pricing, you're like, whatever, I'll just pay like $100 or something right now because I really need it. So like when you think about, for example, when USDC depegged to 88 cents and people had like $100 million of USDC on their balance sheet, it would be rational for them to pay like literally $12 million to get that transaction executed. So at those kinds of points, you're going to see some people just like overpaying so that they can really de-risk their operation, and that's what they care about. But in general, day-to-day times, you might not see a lot of people paying a lot for execution, and that might work for a lot of them. But in the shared sequencing case, you'll definitely want greater guarantees because you have the cost on the other side. So it's going to determine like how they implement these things or what kind of guarantees that they're willing to give and what the user's looking for. We have one more question.
Okay, thank you. So the presenting protocols are like ready to provide precons only in look ahead, and it is like from 10 to 15 minutes. And currently, no one is considering preconfirmation transactions for a long period of time. And so my questions, who do you think are...
Yes.
Yeah. And what are your thoughts about like who will be the main users of preconfirmed transactions and for what purpose they might be useful?
I can see it longer term in the context of kind of like account abstraction or someone else paying for your fees. So to the extent that we go down this path of preconfirmations and maybe Uniswap spends 20 million on gas a month, they could potentially buy just a whole bunch of gas up front and then basically hedge their gas exposure and have like a gasless experience. So I think where this goes is you kind of like abstract gas away from the retail user and you can kind of turn it into an institutional or B2B product. And then it's those businesses that are then buying longer term gas, just like airlines kind of hedge their gas and we don't need to experience it, but we're not there. I do hope we get there.
Yeah, I think the look ahead being somewhat short is only a negative if you want to do like physical settlement of futures, and because then you're bound by the look ahead time. And also obviously market opt-in. Like if you have a very long look ahead and only a few people opted in, you can still probably get a preconf. But with a short look ahead, you need more opt-in to get a chance of someone being able to give you preconfs. As to the main users, I think it's just going to be like for inclusion preconfs at least, like the average Joe trying to pay something, trying to approve something, just make that quicker. And that's going to depend a lot on having like seamless wallet integration, in my opinion. But that's like the main user I see. You also have this somewhat other primitive of guaranteed settlement. So there might be maybe rollups that want to have more predictable settlement costs that will go through a preconf instead of like putting it in the mempool and not being sure when they're ever going to be included. And some censorship use cases, like an inclusion preconf is essentially an additional lane for transactions. It's essentially an inclusion list that you pay for. So I also see that as a potential use case.
Would you, actually kind of just back to you with, you guys are on the Lido side, of course, right? Now, would you guys be willing to create like a fixed rate staking product? Right, because on the buying side, you know, like gas is basically, it's all in the spot market, right? So these yields are basically going up and down. But, you know, if traders or people want to buy gas for the next like 3 months, for example, they can basically pay you like a fixed rate. And on the other side of the equation, you guys could have basically a fixed rate staking product as well, right? So I think it's a function of, you know, in that look ahead window, I think that would be the primary dynamic is can we get into fixed rate instruments or bonds, you know? And you guys could have a 3-month fixed rate staking product, and then people can basically buy 3-month fixed gas fees. That'd be pretty cool.
All right, well, on that note, that's a wrap for the panel. So we're going to take a 5-minute break and then get ready for the next presentation.
Thanks, everyone.